Hello, everyone. It's great to be at AgriConnect 2024. My name is Folu Otubanjo. I lead the key accounts team at Paystack, and I'm really looking forward to learning a lot on this panel today. So, without further delay, I would go ahead and introduce our panelists, who are some of the key stakeholders in the Nigerian agriculture industry today. Our first panelist is Mr. Oludayo Obasanjo, EDM and Director of Obasanjo Farms, followed closely by Mr. Eze Wanaka, Head Agribusiness and Export Union Bank, Mr. Kola Masha, Founder and Managing Director Babangona, Mr. Akin Bayewu, Principal Manager Agribusinesses Nestle Microfinance Bank, and last but not least, Mr. Mezuo Nweneli, Managing Director Sahel Capital Agribusiness. Please put your hands together for our panelists today. Okay, all right. Before we get started, I've been instructed to, for the mic, there's a button on the mic. If you want to speak, just press the button and the microphone will project your voice. All right. So let's get started. On this panel, we'll be focused on financing the future of food security, and we'll be discussing innovative financial solutions to address the funding gap faced by farmers in Nigeria today. So, on that note, let's kick things off. I will start with Mr. Eze. So, my first question is, what are the most significant challenges in financing agriculture on a large scale, and how can we address these challenges effectively?
Good afternoon, everybody. His Excellency, good afternoon, sir, and every other participant here. The question with financing agriculture in Nigeria, it's just like His Excellency said. After his expose, to me, it was as if he had taken everything, and what I'll be doing is just to add to what he has just said. The greatest challenge to access to finance are in various compartments, actually. He mentioned the age of the farmer, which has to do with adopting new technologies to improve yield, number one, the inability to understand contracts and keep to contracts because of their level of literacy, and that inability to understand contracts and keep to contracts makes it impossible to have your recoveries back. Thirdly, is the fact that, like the smallholder farmer is, your level of productivity is not what will give you the kind of yields that repay the loans because of the practices in the field. So there has to be ways to make sure that the smallholder farmer has access to innovations that can move yield to represent and repay the loans. Now, other issues, as a banker, I'm not going to absolve the banks, but I also need for farmers to understand that the banking sector is about the most regulated sector in this country as it is today. And when you have guidelines guiding your operations, you have no option than to abide by those guidelines. So let's start with the current regime of where we are, where, in my own words, not in any economist word, in my own words, we're sacrificing economic growth on the altar of reining in inflation. So we have refused to look at the impact. We have not look. We're not looking at the. We don't have a bird's eye view of the impact of some of these policies with respect to productivity and food security, which, like His Excellency has alluded to, food security is next to national security. And in most countries of the world today, most of the advanced countries that we have subsidy regimes that support what farmers do, but it's only in Nigeria where you cannot issue subsidy on fertilizer, you cannot issue subsidy on anything. Farmers are supposed to appropriately buy at the appropriate market controlled prices. So I give you a typical instance. Some years ago, fertilizer was about 5,500, 6,000. NPK is about 45,000 today. How many farmers can afford that? So if you don't have fertilizer, what kind of yields are you expecting? If you buy fertilizer and you have the yields, how much are you going to sell? If you take a loan from me as a bank and I we'll look at asset and liability management, and I look at CBN directives. I put 30% as my liquidity ratio, which is out. I put another 42.5% as cash reserve ratio. So for every 1 million you give me as fixed deposit, how much do I set out that CBN sterilizes? How much do I trade with to give returns on 100% of the money? What interest rate do you think I'm going to charge? So it doesn't really add up. The, there is a play which the government has to play to facilitate the flow of finance. We cannot run away from it. So you're looking at food security, you're looking at availability of input, you're looking at enticing the younger generation to come in and replace the old generation so that we can have better production. You're looking at bringing in mechanization. You're looking at aggregation, like His Excellency said. You're looking at forming cooperatives. So if we have one hectare, like the lady who talked about her land, if we have 10 of them with two hectares in those places, you have all 100 of them put together, that's about 200 hectares. You can actually put in mechanization, and on a fee for service basis, what they're going to pay is cheaper than owning a tractor. A farmer doesn't really need to own a tractor except you have very large expanse of land. So you can pay for these services. Now, when this happens, we'll be on our way to reining in the cost of this thing. But on access to finance, so unfortunately, Bank of Agriculture is now here. We're the only country today that has a Bank of Agriculture. In my words, not anybody's words, a Bank of Agriculture, a bank reports to a ministry and not to the central bank like every other bank. So by the time you say you talk to AFDB, I'm just giving instances, or you talk to development agencies on technical assistance, you're looking at grants, they look at your structure does not align with any non-structure. Because any grant I bring, a politician is in charge. I can actually move it to my constituency, and you can't do anything. Nobody is going to, give you those kind of grants. So structurally, we have a structure that is ab initio very defective. A structure that is designed not to achieve results. Now, we must start by taking responsibility. The political office holders must actually accept responsibility because next year, I'm very sure by the time you hear from farmers who are from practitioners, the food inflation is going to double what it is, except something happens. You can't have a system that you don't have a structure that allows finance at a subsidized rate to drive primary production. And you've called smallholder farmers. The truth about it is that the way Nigeria is structured, the how many million hectares of arable land that we have, those lands are not all, they are more in the hands of smallholder farmers. You can't throw them away, they're an intricate part of the population. So you must design a structure that accommodates these smallholder farmers. Are those structures available? Yes, they are available. Is it possible to structure them in such a way that I can put finance in that place, I can ring fence my finance, and at the end of the day, I can get my money back? Yes, it is possible. But how do we do that if I am just left to borrow to go in the wild without any hedge surrounding what I give? So when people say banks have money they want to give, banks actually buildings, they don't have money. A bank's, let me give you, a typical bank has a shareholders fund with the new CBN directive, 200 billion. But the loan book is over 2 trillion. So how can 200 billion be equivalent to 200? The money in the bank is your money, which they have aggregated. You're saving to go to school. The mama frying akara is saving to send her children to school. We keep that money. You don't need it in 9 months. Mr. B needs the money now and will return it in 60 days of the 9 months. I give him that money. I intermediate. I take a profit, and by the time you're ready, you get your money. That's what the bank is. So let's also understand the structure and the functioning of banks so that our expectations will not be out of date. So if we put our expectations within the context of what it is and what the regulation allows, we'll be fine. I guess I'll hold on so that my fellow speakers can have it.
Thank you so much, Mr. Eze. All right, now that we've heard the significant challenges that exist, my next question will be to Mr. Oludayo Obasanjo. How do financial issues impact smallholder farmers, and what solutions can be implemented to alleviate these problems?
Repeat, please.
Okay. How do financial issues impact smallholder farmers, and what solutions can be implemented to alleviate these problems?
Uh, that's for small scale farmers, right?
Yes, smallholder farmers.
Um, I think we should first classify it, right? When we talk of smallholder farmers, and we first talk about commercial agriculture. Commercial agriculture, we're not talking of agriculture done for business and for profit making. Just like the other lady said, she's at the bedrock. The smallholder farmer is at the bedrocks, and that's someone who's just starting their agricultural journey. So they're normally in a small well, we have three sections. We have the smallholder farmers, small scale farmers, middle and large scale. So small scale farmers are those who are into a little production and they're just starting out. Now, obviously, like everyone, they have their own issues and peculiar issues. One of the things I think we could do, the first thing is the access to funding. They also have that issue, like the rest of us. Um, I think now, if they don't have finance, they cannot get quality seeds or inputs or checks, whatever it is, whether you're in crop farming and not farming. You need what you call the beginning, whether it's seeds and whatever input fertilizers. If it's animal farming, you need your feed, and there is quality in farming. That's one of the issues that happens, and one of the issues with small scale farmers. They just tend to buy whatever they want, whatever they see and they can is available, just because of funding. And this matters because when you talk about seed or when you talk about seed or whatever input it is, quality matters. Quality will affect your yield. And what does yield do in farming and agriculture? We sell volumes, we sell tonnage, we sell kg. So you have better inputs, most likely to translate to better yield. The next thing the next way it affects is them being able to afford extension services. You must have heard the chairman talk about extension services. Now, contrary to what people think, you don't just throw seed on your land and expect it to grow and do well. There are certain, if you're in a crop production, you do certain things. You first clear your land. There's a land preparation process, even in terms of burning your land, harrowing, plowing, all of that. Now, those activities prepare you for very good yield and performances. Now, because of funding, you have a case where small farmers opt to do little or none of these activities. So, so that's a big problem for them. Then let's talk about scaling, scaling and even keeping production. And let me take the first one, keeping up production. I think it's no secret that the level of inflation in Nigeria now is alarming today. Whatever the figures are, I personally don't agree. I think the reality is more than the figures we have on the papers. Um, Now, if let me take being a small scale broiler farmer. That's the table chicken you eat. If I produce 5,000 birds um, now, and it cost me about 10,000 naira to produce that, I believe that's going to cost me about, if I'm not mistaken, 5 million naira to produce that. Now, if for some reason with the inflation, maybe, and if that was January last year and January this year, it's now going to cost me 15 or 20,000 naira. The input I need is double, and I can tell you that in some farming cycles, you are talking about 50, 100, 150% just between them in the last 18 months, the cost of producing. So a farmer who was doing 5,000 beds a cycle cannot even keep up. Even if he made over the year, made 50% profit over the last 1 year, he can't even keep up with the same number of production he was doing last year. So now that's so just to even keep up with that number, he needs financing too. to get there. Now you talk about now, even if it's able to, you need to expand. And the idea of farming, you want to expand like every company. You are doing 5,000 in a year or two. You want to get to 10,000. You want to get to 15,000. That's how you go from small to medium to large scale. So you need funding for that. I just gave you an example of numbers. It's the same for crop farming and what have you. Now, when we talk of financing, there's something that is missing. I think very missing in agricultural circles, but I think it's also missing in a lot of businesses in Nigeria, but more so our industry, which is financial literacy, and that's something we don't talk about. Now, the average, and it's worse with smallholder farmers. So big farmers like some of us here, we make profits. We understand that you have to keep a percentage for expansion. You have to keep a percentage for depreciation. You have to keep a percentage to replace worn out equipment and all of that. The small farmer doesn't. It's all in, all out. It makes that profit. If it makes a 1 million naira, is spending it doing a party, what have you. So that financial literacy, I think we should add that as a problem. And then ability for farmers to also educate themselves. Um, like if you heard the chairman talk about, you heard the chairman talk about that. I don't want to sound like I'm repeating what he said. I didn't take any of his notes. I can promise you that. So, so in farming, um, just like tech and other places, things are evolving and every three. Before it used to be every decade or 2 decades. Then it's on to every 7, 8 years. It's on to every 5 years now. The cycle in agriculture is changing every 2 to 3 years. Innovation, development is taking coming up. Um, how does the average small farmer get to even know of these events or, or attend them? So, so financing, that's important. And even if they want to know of it, how do they get there? Someone is able to get from Ogun State down here. How does someone from Kogi get to where they could train themselves or Nasarawa or Sokoto? So this is just some of the issues. Thank you.
Thank you so much. Thank you so much, Mr. Ludayo. Okay, so we've heard a lot about the challenges that exist, the financial issues, and how it impacts smallholder farmers. My next question will be directed to Mr. Akin. So, my next question is: what strategies can be used to de risk agriculture and attract more investors into the sector?
Okay, thank you very much. Good afternoon, Your Excellency. Good afternoon, everyone. So, for us to de risk agriculture, we must answer the question first of all, what makes us vulnerable, right? How are we structured as a people, and what makes us vulnerable in the agribusiness space? So the way our country is we have several smallholder farmers, and they are widely dispersed. And because they're widely dispersed, they do not have negotiating power. Sometimes inputs do not get to them. Sometimes they're exposed to production risk, and the little extension that is available doesn't get to them because if I have to move from Musa to the next farm, which is 5 kilometers away, and I'm an extension worker, before the end of the day, I tire out. So some of the things that we can do, first of all, is to deal with the way we are structured, and then we can also deal with financial products that can help de-risk. On the way we're structured, some of the things that Kolamasha is doing, clustering, putting us together in a way that we are now able to get access to inputs, we're able to negotiate better, we're able to get extension in one place and reduce the cost of that extension. Some of those things help us to de-risk agriculture because at the end of the day, what comes out is better, better secured. The quality can be better dealt with on one hand. And on the other hand, knowledge. Us being able to pass knowledge not only to the farmers themselves, but to the financiers to ensure that the right model for lending is what is applied to the people, right? When we've dealt with some of the things, I mean, we also deal with information asymmetry, them getting information on time. Where do I sell to? Who do I sell to? Who is buying what? Who has the best this? And then we also have to have standards. But in dealing with standards, I think that it is a very good case for self regulatory institutions. for the people who will say that if I am buying seed, right, the seed must be able to do A, B, C, D. What I know today, if I'm looking for day-old chicks, I want to go to Obasanjo Farms, right? But then all over the country, I must have some kind of uniform standard that whatever comes out of this seed or this day-old chick seller meets this standard. And if we're able to cluster and we're in large groups, we're able to say, if you don't meet this criteria, nobody buys from you. That is where the negotiating power comes from. That's some of the structures that we can put in place to de-risk it. Now, outside of all of that, we have shocks. And us being able to deal with those shocks, some financial instruments are available. So there are shocks around market prices, there are shocks around changes in weather or things that happen to us. In that kind of space, insurance products that are more apt to these things can come into play. Insurance products that don't just give you how much you put into it, but already have a sense of what it is you're expecting to make, and that is what they insure. So those type of structures, of course, the guarantee that His Excellency spoke about also helps. But even the financial instruments are not sustainable if we don't deal with the underlying risk. And I think that's some of the ways we can.
Thank you so much, Mr. Akin. Mr. Mezu, I will come to you. So, what is there anything that farmers or smallholder farmers can do, either on a small scale or large scale? What can they do to attract more investors in the sector?
Thank you for that. And maybe to give context, we provide equity capital to agribusiness. We also do private credit as well. So we have investments around Nigeria and across the sub-Saharan Africa. And the way we approach it, because it's actually quite difficult to single out small farmers and provide them credit directly, and then manage that credit risk, and also to provide extension services, is quite difficult to do it on an individual basis. So the way we approach it is to invest into agribusinesses themselves, and then work with them to then build out a farmer outgrower network to provide them with raw materials they need, and they can provide extensions that way. I think that's a little bit easier for us to engage. So, for example, we have investment in Anambra State, Costaris Farms. They have a large nucleus rice farm, which 2,000 hectares, they're cropping half of it on rice. But we've also worked with them to engage 5,000 farmers from the surrounding community for them to actually then take rice paddy. And then that's providing them inputs, extension services, training, in some cases helping them with land clearing and other services. And engaging that way, so if you are either a financial institution or a firm like ours, engaging that way is easier to then get financing to the farmers themselves. Now, if you're providing financing directly to farmers, then to the degree that they're in cooperatives, it also makes it much easier to manage risk and to engage with the farmers themselves. So pulling them together into groups or engaging through off-taker partners, I think helps manage that risk to some degree and helps provide that training and extension services. I think Baba mentioned it earlier, I think Dai also mentioned it as well, is that ultimately, beyond giving the financing, beyond giving the inputs, it's very critical to see how do you wrap around that support, which in many cases is even more important than the financing, to then provide to enable that growth and output. On our side, we have a small pot of grant money. So beyond our commercial money that we raised, we also have a small pot of grant money from donors to provide some of this training, extension service, and support, which is actually quite needed, and in some cases hard to do with commercial money. That training should be done in a multifaceted fashion. It should come from research institutes, like it's done in many parts of the world, engaging with the farmers for extension. It should also come through private sector engagement as well. So the more we provide that support, multifaceted efforts to the farmers, the more we see widespread impact.
Thank you so much, Mr. Mezo. All right. So we've heard a lot about the finance play. I will bring it to Mr. Kola into like the technology and how like financial institutions and governments can collaborate better. So my next question is, what role can technology play in facilitating access to financial resources for farmers?
Well, thank you very much. I hope everyone can hear me all right. So I'm going to answer that question utilizing the really excellent framework that His Excellency outlined in his keynote. So first, looking at the generational gap. I think at the end of the day, with Babangona, So Babangona today is, we've grown to become the single largest corn producing entity in Africa. We're supporting about 400,000 farmers at our peak in a single year. Um, Supported farmers on 170,000 acres. So to put that in context, if you visualize what one Manhattan looks like, now visualize 12 of those, and that's about 170,000 acres. Now, on the generational gap piece, it's a very critical challenge. We've been able to address that by with our average farmer that we work with is 70% of them are youth. And the way that we're able to do that is by identifying the constraints that young farmers have above older farmers and solving for those constraints. So those constraints are really three key constraints. The first constraint is small farmers tend to have smaller plots of land. So for them to be profitable, the level of intensity that they have to practice is much higher. So that's one of the reasons the packages that we provide them, the technology, the best, all of the best practice technology enables them to really achieve incredible yields, with the top 25% of our farmers getting yields that are about 3 to 4 times the national average. Now, the second challenge that they face is they have less access to capital. So you have to develop a loan product that has a very, very low equity contribution. So our equity contribution is very easy for a farmer, small farmer to come up with. And then finally, they have less access to labor. And so, because they have smaller families or younger families. And so you not only need to bundle into the package the standard, seeds, fertilizers, so on and so forth, but you also have to bundle in products that help them overcome that labor constraint. So labor saving technology. So we today run the single largest harvesting operation in Nigeria. We have a capacity to harvest 900 metric tons of corn every hour. So to put that in context, that's about 30 trailers that you see on the highway every hour. So you've got to be able to develop, support them in those areas. Now, on the production gap piece, I think it really comes down to ensuring that you drive productivity growth. So over our nearly 15 years running Babangona, we've been able to add 1 billion kilograms of maize to the Nigerian market, right? Enough to provide every man, woman, and child in Nigeria over 5 kilos of production. But the key to that was enabling farmers to achieve productivity growth dramatically above what they can afford. Now, on the financing gap, which hands down, His Excellency highlighted, is the biggest challenge. So our goal at Babangona is by 2043, we want to support 50 million farmers, not just in Nigeria, but across the region. And to accomplish that would require $50 billion in financing. Now, that's a very big number, but it's a relatively small number in the context of available debt in the world. The world has $100 trillion in debt financing. So it's a small drop in the bucket. But the key is being able to catalyze in commercial banks that don't typically lend to smallholder farmers. So for example, one of our lenders is Citibank, right? Citibank would not be the type of commercial entity that you would see as a lender to smallholder farmers, but being able to structure that. But to accomplish that required us to be able to structure financing products that could bring in commercial capital. So, Kudzai here from FCMB was our very first lender over a decade ago. Our lending with FCMB has grown 2,000-fold, and because we've been able to borrow at commercial rates and ensure the farmers are low risk enough that they can absorb that, be profitable, and return those loans. Now, on the question of R&D, and I should also mention on the financing side, having partners like Dio from Obasanjo Farms is very critical because they help to de-risk us and enable us to unlock more capital. Now, on the question of R&D, the way that we've been able to enable farmers to unlock the best technology, right, is that you have to bundle it in such a way that they're able to get the best return on investment for it. So you can't just give a farmer good quality seed without access to chemicals and fertilizers and other services. So you have to bundle that all together, which is what we do. And it's when you bundle it, it's very expensive, right? Technology is not cheap. And so a typical farmer would have to need somewhere in the range of about $500–600 per hectare. And with that, so that has to, you overcome that challenge by giving them access to finance and ensuring that you manage the risks. So we've operated now going on nearly 15 years with a 99% repayment rate. So that's been exceptionally critical. So I think at that juncture, I will pause. Okay, my final point is to the last thing that His Excellency talked about, infrastructure. Um, I think stomach infrastructure is exceptionally important, but I'll highlight on physical infrastructure. You know, at the end of the day, the number one thing that government can do to drive growth in the agriculture sector is invest in the key infrastructure that unlocks private sector investment. And the number one thing they can do is actually investing in rural road networks. Because at the end of the day, what does an investment in a rural road network accomplish? Several studies have shown that the average yield of a farmer, once they are more than 4 hours away from a major market, drops in half. The longer they go, and that's fundamentally because the further away they are, the higher it costs them to get inputs. And there are fewer suppliers of those inputs, so there's less competition. So they're paying higher for the cost of farming. Then when they need to ship out their produce, there are fewer buyers, and it's more expensive to ship from there, so they are getting a lower price. So their margins are very squeezed. And so by investing in rural roads, which countries like Ghana have done an incredible job with, you are fundamentally providing a dramatic increase in profitability to the average small farmer.
Thank you so much. That was very enlightening. All right, so we run out of time, but if I could go on and on, I could ask more questions. So thank you so much to our amazing panelists and for all the insights that you've shared. I don't know if we have time for questions. One or two questions?
Do we have time for questions? I think we can maybe take one question.
Yes, if we can take
Let's
one
take
question.
One question.
If you have a question, please just signify by raising your hand.
I saw a hand in the middle over there. Okay, maybe the. Okay, nope, I think that's. Any questions? No. All right.
Okay, I don't think we have any questions.
If you have a question, maybe you can speak to the panelists after.
Yeah. All right, thank you so much to our amazing panelists, and thank you for being a great audience.
Thank you very much. Let's put our hands together for our moderator and our panelists. Very well done. Financing the future of food security in Nigeria. Please kindly stand and take your picture, and then we will get ready for the next panel. Please allow me to specially mention the presence of Honorable Minister Bosun Tijani, Minister of Communications and Innovation and Digital Economy of Nigeria, who walked in as the first panel was starting. Baba, His Excellency Chief Olusegun Obasanjo, aka the farmer, is also joining us on stage to take some pictures. You may go in the middle. And also, can we ask His Excellency the Honorable Minister to join us on stage as well? I'd like to also mention Honorable Olayato Aribo of Ondo State is represented by Mr. Adio, former SSG of Osun State. Really glad to have you in our midst. As I mentioned, the VIPs, let's all remember that we're all VIPs. Miss Abisola Olushan